Hey friends, Fred here. The Federal Reserve just dropped interest rates 0.25%. Did 30-year fixed rates drop 0.25% as well? Let me share with you, not necessarily and why. But before I do, why did the Fed drop the interest rates? Chairman Powell admitted that the labor market isn't so solid. That was so frustrating to many of us because a lot of individuals have been laid off, stopped looking for work, are underemployed, and the labor market, we feel, is not as strong as the Federal Reserve believes it is. In fact, the last couple of months there was 40,000 jobs created, and they revised it and said, no, we lost 60,000 jobs. That's a big retracement, right? I mean, what if someone quoted you one interest rate and turned around a couple of days later and said, no, it's 40% higher? Well, wait a second. You wouldn't use that individual, but the government gets away with it. So the labor market's not as strong, Powell said. And then inflation's in check. If you look at the Trump tariffs and you take that out, they believe inflation is a little more in check. Now, your grocery bill still might be high, but it's not going to come down. That's deflation. But it's not going up as fast. And that's what's most important. And the balance sheet, one little tidbit, and then, thanks to MBS Highway for this information, the Federal Reserve is going to start buying Treasury bills. And what that's going to do, it's going to cause interest rates to stay lower on the lower end, and it's going to create some demand on a 30-year fixed rate loan. So it's going to create demand for interest rates to continue to drop. Very interesting, very good. They do say that there's some, I don't want to say some dissenters on the Federal Reserve where they think some think rates should be lower, some think rates should be higher. Maybe that's a good thing that they have some dissension and they have some good discussion behind the scenes. But I do want to talk about your 30-year fixed rate. No, interest rates did not go down by 0.25% on your 30-year fixed because this is overnight borrowing. This is money that's on your credit card. This is money on your car loan, your home equity line of credit. That's going to go down at the end of the month, which is fabulous. But it's not 30-year fixed rate lending, but it influences. And in fact, over the last 6 months or so, interest rates have come down about 1% in anticipation of rates continuing to come down. They need that to drive the economy. Now, what's going to happen this coming year? I think the Federal Reserve is going to have a different composition. The president's going to select a new Fed governor or a Fed chairman that's going to be much more, they say, dovish towards interest rates, which is more accommodative to low interest rates. And the jobs are not going to be as plentiful, and I think that's going to affect it. It's going to be about the jobs. It's going to be about inflation. I think inflation will mellow out as soon as the Trump tariffs come down or kind of get resolved, if you will. So I hope this explains why your interest rate didn't drop by 0.25%, but it's slowly